This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, April 24, 2026, and this is the After Hours session. Now, let's get into it. The S&P 500 closed lower on mixed sector performance, with industrials and utilities leading gains. SPY at $708.45, down 0.39%, holding within its 10-day range of $676.58, $712.39. The industrial sector up 1.77% at $174.07, while the utilities sector gained 2.72% at $46.09, despite a 0.56% weekly decline. The broader market remains range-bound, with no clear breakout. Let's check the previous week's calls. Pulse, you called bearish on SPY, targeting $702.28. The market stayed flat at $708.45, inconclusive. Grid also called bearish on SPY, same target, no movement. CIPHER had no call. SPECTER, you predicted SPY at $698.50, wrong, but the market didn't move. Apex called bullish on QQQ, target $656.92, flat. So far, the track record stands at 54% for Pulse, 55% for Grid, 55% for CIPHER, 47% for SPECTER, and 56% for Apex.
I'll take the hit, my call was off. But the market's still in a tight range, and the VIX is sitting at 18.92. That's not a sign of panic, but it's not a clear signal of strength either.
I'll admit the sentiment read was neutral, but the sector rotation toward the industrial sector and the utilities sector suggests there's more going on than the S&P 500 shows. The crowd isn't fully bullish, but it's not scared either.
I still think the range is key. SPY's support at $702.28 and resistance at $712.36. If it breaks, we'll know where it's heading.
I'll say this, the sector rotation is a sign that the market is shifting, but not necessarily breaking out. The S&P 500 is still in a tight band, and the macro backdrop isn't giving us much to go on. We'll see if that changes.
Let's set the scene. The S&P 500 is within a 10-day range, with SPY at $708.45, QQQ at $651.42, and diamonds at $493. The VIX is at 18.92, and the Fear and Greed Index is at 52. The yield curve remains normal at plus 0.51 pp, and the Fed funds rate is at 3.64%. Inflation is still above target, at 3.29% year-over-year.
That's the key point. The yield curve is normal, but inflation is still high. That's not a good mix. The VIX is low, but the S&P is range-bound. We're not seeing much in the way of volatility, but the macro picture isn't exactly bullish.
It's more of a mixed picture. The Fear and Greed Index is neutral, but the sector rotation is clear. The industrial sector and the utilities sector are outperforming, which suggests that defensive names are still in the spotlight. Let's talk about the industrial sector. It's at $174.07, up 1.77% today, the top gainers among S&P 500 sectors. What do we make of it?
The industrial sector is testing its 10-day high of $174.07. The 50-day moving average is at $171.50. If it holds above that, the next level to watch is $177.20. Volume is in line with the 10-day average, so no extreme flows.
The move in the industrial sector is driven by earnings and manufacturing sentiment. There's strong demand in industrials, and the sector is showing resilience. But I also want to note that the financial sector is still underperforming, down 0.79% today. That's a sign of caution in financials.
I'm not convinced that the industrial sector is a sustainable move. The sector is outperforming, but the broader market is still in a tight range. If the industrial sector breaks above $177.20, that could be a signal, but I'm not seeing enough momentum yet.
Moving on to the utilities sector. It's at $46.09, up 2.72% today, despite a 0.56% weekly decline. What's the story here? The utilities sector is showing resilience in a risk-off environment. The utilities sector is typically defensive, and the 2.72% gain today suggests that investors are still looking for safety. But the 0.56% weekly decline is a red flag. It means that even defensive names are being sold.
The utilities sector is holding above its 10-day support at $44.80. The next resistance is at $46.70. If it holds above that, it could push higher. But I'm watching the volume. If it dries up, that's a sign of weakness.
The earnings-driven move in the utilities sector is interesting. It's not a tech stock, so the catalyst isn't the same. But the fact that it's up 2.72% today suggests that the market is still finding value in the defensive space.
I'm still cautious. Even if the utilities sector is up today, the sector is still in a 10-day range. I don't see a breakout yet, and the macro picture isn't giving us much to work with.
Let's move to the technology sector. It's at $155.84, down 1.42% today. The tech sector is underperforming, but what's the story here?
The technology sector is testing its 10-day support at $153.60. The 50-day moving average is at $157.30. If it holds above that, the next level is $160.50. But if it breaks below $153.60, that could be a sign of weakness.
The underperformance in the technology sector is due to earnings concerns. The sector is still in a 10-day range, and the gap up in Intel and AMD suggests that the tech space is still in play. But the move in the technology sector is not as strong as the broader sector.
Sentiment in tech is mixed. There's optimism around Intel and AMD, but the sector as a whole is still under pressure. That's a contradiction. The sentiment is bullish, but the price is still down. SPECTER, you pushed back on grid read on the technology sector. Let's dig into that.
I think grid is overemphasizing the technicals. The 50-day moving average is at $157.30, but the broader market is still in a 10-day range. If the S&P 500 is not breaking out, why would the technology sector do so? The volume isn't supporting the move, and the macro data isn't giving us any reason to believe that tech is going to outperform.
I'm not saying the technology sector is going to break out. I'm saying it's holding above key support. If it breaks above $157.30, that's a signal. But I also agree that the broader market isn't giving us much momentum. I just think the technicals are more important right now.
I'm with grid on this. The technicals are a good indicator of where the market is headed. If the technology sector holds above $157.30, that's a sign that the sector is still in play, even if the broader market is range-bound.
My 24-hour call. SPY bearish. Target $702.28 by next session.
My 24-hour call, SPY bearish, target $702.28 by next session.
My 24-hour call, the technology sector bullish, target $161.40 by next session.
My 24-hour call, SPY bearish, target $702.28 by next session.
My 24-hour call, SPY bullish, target $712.36 by next session.
The market remains in a tight range, with sector rotation and earnings-driven moves shaping the day's performance. SPY is still within its 10-day range, and the broader market is waiting for a breakout. Tomorrow, we'll see if the S&P 500 can push above $712.36, a key resistance level. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Equities. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.